And we will start with our first panel, and I'm psyched to welcome, for Breaking Barriers, Accelerating AI Adoption in Financial Institutions, a good friend and a fintech legend, Al Goldstein, Walter Mix, former California Banking Commissioner, and this will be moderated by Alex Johnson, the founder of Fintech Tanks. Let's hear it for them.
Okay. Well,
thank you, Johnny.
Yeah, that was great. I will fall on the sword and admit that it was me who sabotaged the audio for the governor's message. I didn't want to have to follow the governor, but they got it fixed, so we'll do our best. I am delighted to be moderating this conversation. As I said, my name is Alex Johnson. I write a newsletter called Fintech Takes that analyzes the intersection of financial services, technology, and public policy. AI, as you might imagine, sits at the very center of what I care about on a week-to-week basis. So very excited to learn from these two gentlemen here with me on stage. I thought it might make sense to start by having each of you introduce yourselves and then maybe just give a couple of minutes of context on how you think about AI and sort of your general perspective on the topic, and then we'll dive in.
Well, terrific. My name is Walt Mix. Thank you for welcoming into Utah yet another Californian stopping through. I am trying to gain some acclimation to the clean air, and it's taken a couple days. Just kidding. Actually, I come here regularly to ski and to work with a number of financial institutions. My background is I love to joke that I'm a recovering bank regulator. You never really recover from having been a regulator. I was also a real banker for a long time. I was the chair of a compliance committee for a digital bank for a year and a half. I bought an artificial intelligence company 10 years ago, back when people looked at me cross-eyed. And I've been implementing machine learning and artificial intelligence at banks for about 15 years. Everything from rule sets to data cleansing to implementing the technology in an iterative way. A couple things I would point out at the outset. In terms of how to maximize implementation of AI, I think the regulatory community has a big role to play, and that is providing clarity around what the regulatory expectations are. I think the industry, in turn, has a big role to play in terms of asking the right questions and coming up with very detailed scenarios that you can take to your regulator and get a supportive response from that regulator. I find that most regulators do want to work with you, but they need to be put in the proper position in terms of presenting them with the right questions. So those are a couple of kickoff comments for you.
Awesome. Thank you, Walt. Al?
Yeah, perfect. Thank you. And thanks for everybody for coming here. Like John said, it's 3 months to put a conference like this together. Never having done a conference, I think it's got to be some sort of record. So it was amazing, except for this morning, it almost all just fell down because the coffee wasn't here. So I don't know about you guys. Like, I almost had to go home, unfortunately. But just real quick, I think just amazing accomplishment by the team at Spring Labs to put this together, this amazing group of people. I've gotten to meet a lot of folks. You know, this morning, last night, got to see a lot of friends from many years of doing this. So quick background, started my career in investment banking for 7 minutes at some point 20-some years ago. Realized fairly quickly that was not going to be my path, and so ended up co-founding a company called, at the time it was called CashNet USA. Today it's called Innova International, one of the largest subprime digital lending businesses really in the world. And that's where John and I met. So John was an intern of mine that came in and really helped us prototype at that point what was cutting edge, which is building logistic regression models to drive better analytical decisions in in online lending, in subprime lending. Based on that, we won. So again, we've sort of been in this movie. It wasn't AI then. Then I built a real estate business starting in 2009 to buy distressed multifamily. And then John and I and Paul Zhang, who's here, I think Paul's going to be speaking later, got back together in 2013 to build Avant. And the whole premise for Avant is use better analytics, use machine learning. At that point, we were building cutting edge decisioning models based on limited data to drive better outcomes for consumer credit. And that company has continued to flourish. Obviously, there have been lots of ups and downs in fintech. You know, a lot of people here in fintech, if you've kind of been in this movie for a long time, you've seen it's a bit of a sine curve. You know, we joke, our team is still together with Avant and Amount. We're like the tallest midget in the room. We're still here. You can't get rid of us. We're like the gum on your shoe. But ultimately, that's what it takes, I think, to be successful. And then today, actually, my co-founder is here sitting here, Matt Ferran and I, and our other co-founder, Jake Nice, have a business that's called Stoic Lane, where we're building a holding company to invest in more old line operating businesses. Namely, we're rolling up accounting firms. We're trying to build the largest accounting firm in the country focused on small businesses, vacation rental management companies, and real estate valuation and appraisal businesses. What they all have in common is that they can benefit dramatically from automating various parts of what we do. So I'm a huge believer in adopting latest technological trends, latest modeling capability, AI, to solve real world problems. And that's what I think we're here to talk about, is how do you actually take the tools that are being developed and apply them to real businesses.
Awesome. Okay. Well, building on what you just said, I think the thing I wanted to start with as we talk about accelerating AI adoption in financial institutions is just acknowledging that, as you said, AI is not new. Right. I worked for FICO. FICO's been talking about AI for decades. I think in the slightly more modern context, but still quite old at this point. 1994, Signet Bank spins off Capital One. They develop risk-based pricing, very sophisticated analytics. So none of this is really new. And yet I think the reason why everyone made the trip out here and we have a full room to talk about this topic is we all recognize that AI has sort of fundamentally leapt forward in the last couple of years. And whether you want to call that foundation models, large language models, generative AI, whatever the language is we use to describe it, there's been a fundamental shift in the technology and the capabilities that we have. So I want to start by just getting a sense from each of you on when you think about AI in that most modern context and think about what's changed and what's different now that we have these capabilities, what stands out to you as being a very exciting opportunity? And Al, I'll start with you.
Yeah, no, I think you're totally right. So we have different terms that people were throwing around, and ML was kind of the term du jour, 10 years ago. But we've leapt forward dramatically because I think we were really focused on quantitative decisioning, and it was very hard to apply it to the day-to-day. And now we have the ability to apply kind of real-time decisioning, logic, and thinking to what we're doing every day. Albeit, having been riding the fintech wave for 20 years, I've become somewhat cynical because I think when I first started in 2003, I think the whole idea was, banks are dinosaurs, they're going to disappear. In 2013, 14, 15, I don't know who here remembers, sort of Lending Club, SoFi, a lot of folks out talking about how banks are again, dinosaurs, they're not going to make it. There were 350 or 400 online lenders, digital lenders in 2014 or 15 that have raised huge amounts of money. There are probably 10 of us left. So I think it's hard. Existing businesses are here to stay. Distribution is hard to displace. So the question is, what really makes it hard to get technological adoption? And I think the challenge is you have very specific use cases in every business that you're trying to solve. I'm currently not a believer that the foundational models are going to be the end-all, be-all of that solution. I know there are multiple schools of thought. My view is solutions like the ones being developed by Spring Labs as applied to specific use cases like compliance, like call center capability around heavily regulated industries are the future. And that's what we're trying to do in our businesses. So to me, that's the part that's exciting. Again, we're in the vacation rental business. We're one of the largest managers of vacation homes in the country. We spend countless man hours writing content and creating ads for our homes and answering, questions from people that are locked out. If we can, and I think we can automate a lot of that, like fairly easily over the next couple of years, hopefully, and drive ultimately better pricing, better execution for our customers. To me, that's the thing that's most exciting.
Awesome. Walt?
So you may find that Al and I have complementary perspectives. I'm going to set forth for you some of the regulatory and compliance issues, but I fully agree with what he just said. So if you look at third-party risk management, if you look at fraud, BSA AML, if you look at basic complaint issues around the country at banks, my view is these can all be addressed very efficiently, very effectively, as I said at the outset, by coming up with very targeted, focused scenarios, which again, I consider to be complementary of what Al just said. And to the extent that you come up with these targeted scenarios using AI and subject matter experts, that's the kind of solution that I think about. That's the kind of way of advancing the ball, just like out here on the football field. Making it a productive set of downs as you move down the field. So how do you do that? The number one thing for me is getting the data set up properly. I can't tell you the number of banks I go to around the country. The fields aren't completed. The data doesn't go back in time sufficiently so that you can organize it and set up the rule sets properly so that you can actually use artificial intelligence. So that sort of front end cleanup is really necessary, and you can use AI to do it. The other thing I think about is we just did this for a large fintech bank. They had that data problem I just mentioned, but more than that, they weren't getting the information they needed from their clients. Silicon Valley clients that didn't want to share the information with the bank. So we set up a system so that we could mine the data and use probability analysis to gain certainty around the data, and then we were able to move forward with the project. So it's that kind of coming together between regulatory specialists, subject matter experts in fraud, compliance, complaints, whatever the case might be, and the artificial intelligence experts. I found that's a great way to advance the ball.
All right, so let's talk specifics just for one sec, because I think AI tends to get away from us pretty quickly when we talk in generalities. If there's a specific use case that jumps out to you that you've seen, and again, in a very modern large language models, generative AI context where you're actually seeing traction in financial services, what stands out? Al, maybe you can go first.
Yeah, for sure. And there are a lot of press releases out there. The Klarna press releases have been the ones probably most captivating in financial services. Again, I'm not on the inside. I don't know how true or real that is, but I've heard the experiences are not amazing.
You're our skeptic on the panel, so I think that's fair.
That's right.
Yeah.
I'm the cynic, right? The naturally born cynic that does startups. So I think you learn from your own pain. You run into a wall enough times, you learn it's painful. So I would say in terms of what we're trying to do, and just what we've seen at Avant, and I think you'll hear from Paul, and Charles is here, runs product, and at Amount, which helps banks originate credit through digital origination capability.
Yeah.
The two use cases that I think at least today are most exciting are, again, the compliance use case I know is one Spring Labs is really focused on, is straight up the middle. It's pretty simple. You get complaints all the time. It takes a long time to sift through them to get through to what the key critical ones are. How do you prioritize them? How do you respond to them? The chatbot, use case, no brainer. Lots of people are trying to do it. How do you execute it efficiently? How do you actually get that to be voice also? Because that's huge. I can tell you the things that we're really excited about within Stoke Lane. As I mentioned, some of our businesses, we're building an accounting business. I've had this argument, I would say, being the cynic, with one of the founders of early AI. Think of the app where you talk to your phone and most of the time it doesn't understand what you're trying to tell it. About how in the next 2 years there won't be any more accountants and everything will be done with AI. And I've heard the same discussion about lawyers. Like, I am putting huge amounts of money, personally in our investors' capital against that argument. I think that's just crazy. And the reality is, I think we're going to a world where experts should be able to do more. And how do we get them to do more? And Walt was talking about this. You have to ingest data, and you have to produce the perfect outcome, and getting the last mile is really hard. Like you and I were talking about, and my wife and I, we bought our first Tesla in 2012, and then we bought, one in 2016, and I use less autopilot today than I used in 2016. So it's how do you get to enough precision that you can actually deploy it at scale, especially if you're talking about banks. You're talking about heavily regulated institutions that really can't make mistakes.
Well, that's a good point, right? Because I think driving and financial services are actually pretty similar in that it is a very high precision activity, and our tolerance for robots killing us is very, very low. So I think that's a very, very fair comparison.
Yeah, I don't want to be part of that.
Yeah, no. Well, and the reason I mention it is just that literally last week, the first chatbot powered by large language models that is being used to actually recommend stocks to buy and sell was released in Israel, and it was approved by regulators. There's lots of guardrails they're trying to wrap around it, but we're headed towards this world where these things are going to be making more decisions and are going to be in more control. Walt, what stands out to you as a specific area that you're looking at when it comes to use cases?
So I travel all around the country, from New York to Miami, California, various other states, also Singapore, Dubai, places like that. What I'm seeing is a real surge in activity as it relates to sanctions, as it relates to BSA, AML, and fin crime issues. If you look at, whether it's President Trump or President Harris, those issues aren't going away. You probably noticed that Biden took a very similar approach to China as Trump did. So these issues, as I say, aren't going away. So banks and other financial institutions are busy getting ready to deal with these issues. What we're working on, and we've worked on this all around the country, is everybody knows what a SAR is, Suspicious Activity Report. So you can use machine learning to prepare about 80% of the SAR using technology. And then, to what Al was just saying, that subject matter expert working at the bank or working at the fintech can work on that last 20% using much more intensified information, enriched information, and it's a huge savings, and it's a lot more effective in my experience. So a lot of banks are worried about efficiency ratios. They're worried about ROI. They're worried about return on a per employee basis. This, I think, is something that can become an enlightened self-interest to banks and fintechs alike. And we all know that regulators like having licensees under their supervision. Well, to the extent that banks, for example, in Utah or California, are able to do these sorts of things, they end up being the winners in the competitive process. So that's, I think, a concrete example of how AI can in the banking industry take you that last mile.
Okay, so I wanted to talk about the regulatory side of it, obviously, because as much promise, I think, as a lot of this technology presents, you have to get comfortable with it as an industry, as practitioners, and certainly from a regulatory perspective. And, it's interesting. I don't think there's a hotter corner right now from an investment startup perspective than AI for compliance. I think it's number one at the moment. I see AI for compliance, new startup, just raised a seed round, just raised a Series A, coming all over the place. And I have a hard time, kind of going back to your point about press releases, distinguishing between what's real and what's not. But I also think the other challenge there is you then go to your regulator and you say, yeah, instead of adding more bodies, say I'm a bank and I'm getting into banking as a service, instead of trying to staff up and grow my compliance function by adding headcount, I'm going to scale this using technology. I'm going to scale this using AI. And what I've heard from the banks that have tried to make that pitch to their prudential regulators is that it doesn't go that well, and that regulators are not really that comfortable with that idea. They know what adding headcount does for helping address these challenges. They don't know how AI helps them scale. So,
but regulators are not focused on efficiency and
not as
being
much.
innovative with banks?
Not as much as you might hope. And again, that's like their job. I understand it's coming from a very good place, but it makes that conversation really, really difficult. So, Walt, maybe I'll go to you first. When you think about just how AI and regulation are kind of smashing into each other, you talked a little bit about trying to set clear expectations with the regulators you work with. Can you delve a little more into that?
So when I was a regulator for 8 years. We would invite the industry in to meet with us, to talk about trends, to talk about what they were going to do next. I was obviously in California, but the regulators worked together. So I worked quite closely with the gentleman who was then the commissioner here in Utah. And he would always start off with the statement, well, consistent with safety and soundness, comma, we're open to hearing your arguments. And so I think it's really important that as, you gain a new governor, as we look at the national election, I'll try to be as politically agnostic as I can be here, that we vote for people who are going to be sensitive to these issues, Democrat or Republican. What we need is practical people who aren't going to be ideological, for example, on the Senate Banking Committee, which confirms who will be the next controller, who will be the next head of the FDIC, et cetera, et cetera. We need those sorts of practical people. So then take it down a level. What I've found over the years is you have your policymaking people, but you have your examiners. And meeting with the examiners on a regular basis, I just did a meeting in California where we had examiners from all 4 prudential agencies. And we came in and we educated them on some of the latest trends, one of which I just described in BSA.
Sure.
And I think that's sort of regular communication. And I know you have the Utah bankers here. And this is the kind of thing that trade groups do regularly. But I think if people join together, fintechs and bankers alike, we can go a long way toward educating people. Now, to the specific point, what I've found is you can use attrition. You can't just go in and chop headcount off, right? But you can use attrition and you can bring in technology together, and that sort of scenario will sell.
Yeah, maybe I could just build on that a little. In my own experience of selling into banks and also from being a lender and being pretty early on the forefront of using machine learning models for credit decisioning, and then how do you get your bank partners, in our case, WebBank, who's in turn regulated by the Utah Department of Financial Institutions and at the federal level comfortable, is you have to be very, very careful about, what you're doing passes the existing regulations. It's actually more precise, not less precise. It adjudicates more efficiently and provides value. And I think ultimately that's where we've gone and gotten over the hurdle from a bank, because whatever the regulatory requirement is, the bank's going to have compliance people, and they're going to have their lawyers, and they're going to interpret the most conservative possible view, and so it's going to cascade. And so our view on how do you get banks to adopt AWS, which is not quite as simple as you would think. Like we were the first installation of a cloud partner for 20 banks. And it's hard. And I think the way you get there is you have to show that you're not sacrificing compliance, you're not sacrificing precision or performance, you're actually getting better, and you're following the rules more stringently, more strictly. And I think we could do that across compliance. Again, you have A/B tests. You have here's the manual process, here's the AI-assisted process. The AI-assisted process is better, it's more efficient, it categorizes more efficiently. And that's how I think you can actually sell. And so, whatever it is, whether it's compliance, whether it's chat, voice response, it's decisioning, it's fraud, I think the key is we actually just need to be better.
All right, Walt, last word goes to you.
So 2 things. who at their bank knows of a very risk-averse BSA officer? A lot. Okay? Selling that BSA officer on why this is better for him or her can be a real key. It's an opportunity for that person to grow in their skill set, to become better at their jobs. But more than that, some of you may know there was a recently promulgated regulation. The comment period ended on September 3rd, relating to risk assessments. Risk assessments are now a key requirement in the 5-pillar approach to BSA AML. That's data-driven. That's empirically based. So here's a great example to take AI and machine learning to help people at the bank do a better job. Rather than just the same old stale approach, take that regulatory challenge and flip it and make it an opportunity.
Awesome. Well, that's all the time we have. Please join me in thanking Al and Walt for sharing their expertise.